Next up, we have SpaceX. So SpaceX was doing, we talked about this in the last videos, but they're launching satellites for their Starlink program. And this is to kind of beam down internet connectivity to different rural areas, and also to just enable another method besides having those wired or the fiber optic connections to your households. So Elon Musk actually came out with pricing this time, and he said it's going to charge about $100 a month for this service. There's about 900 satellites now that they have launched. So they're starting to develop this network. And although that price is a little bit higher than your average cost for maybe your local provider, eventually they can bring that cost down, and it can also support areas that you couldn't necessarily easily run a cable to or fiber optic line. Next up, we have Harley-Davidson, HOG. So HOG decided that they were going to change their strategy here. They have a new leader in charge of the company, and instead of focusing on smaller, tiny motorcycles for overseas markets, they're going to go back to what they were originally made to do, which was make these huge Harley-Davidson big motorcycles for their hardcore fans that would be primarily in North America. So switching to this one, they actually had a good earnings report here, and the company was up, the stock was up after the earnings report. Some of those bikes that they're looking at now, they can cost up north of $40,000 for one motorcycle now. And they want to go back to this higher end of the market versus these smaller, more easily accessible bikes. You think $40,000, I mean, that could be a down payment on a house. I mean, you can get a SUV for that much. So it's a very higher end of the market that they're now going back towards. It seems like investors like that strategy though. So we were talking about how different countries were dealing with COVID-19. We have some bad news from France and Germany. So they both decided that the number of cases has been spiking so much in this kind of second wave here that they're going to go back into a partial lockdown. So schools may return to, being partially closed. Curfews can come back in play here, and non-essential business owners are going to have to close their businesses, and there's restrictions on movement that are coming back. So there's a lot of additional restrictions on the economy that are coming back into place and might kick them back a few months now. All bars and restaurants in France will be closed. Pretty crazy there. So they're really trying to take a strong stance to stop this while they can. Next up, we have some information with Topgolf. So Topgolf is actually a kind of a entertainment venue that you go to, and it's basically like a driving range. And you have separate areas where people, usually multiple decks on this driving range, and people can hit out the golf balls and try and hit targets, and you can score it. And it's a lot of fun. You should try it out if you haven't tried it. But it turns out now that this Callaway Golf Company is purchasing Topgolf for $2 billion. Topgolf Entertainment, they've been doing really well recently if you look at it. So Callaway already owned 14% of the company. And this company has been growing at a 30% compounded annually, 30% compounded annually rate since 2017. Last year, they made $1 billion in revenue. So they've actually been doing pretty well. And some of those areas are opening again because they're spaced out enough where you can do social distancing and still be able to kind of engage in their form of entertainment. So this is a big one here, and one that I really got to talk about. So you had some crazy stuff going on in Chile. And to start off with, there were these protests that started occurring back when, I think this was last year. You had protests where they raised the cost of transportation for like the metro, for bus systems and public transportation. You had a lot of younger people, especially, a lot of people going out and protesting this, a lot of people jumping over the turnstiles for like the kind of the subway service and all of that information, or those types of transportation. Then there was a crackdown on that. There was more protests. People are protesting that the cost of everything is just getting too high for the people that are not well off at all. I mean, if you're struggling and you're raising the tolls, you're raising the amount that they have to pay for simple public transportation, it's a big burden on the lower income families. So this occurred, and it developed worse, and then there was protests about people are not excited to go into debt to get an education, and they were protesting that, the continued increases in cost for education. So now you had basically a giant referendum that came out. The president actually went and said, okay, if you want to change our constitution, we're going to do a referendum and you can change it. Well, they voted on it, and they actually voted to change this constitution and kind of make a new structure for their society. And this is important because if you look at this constitution, it was actually made about 40 years ago under Pinochet, who was basically running everything like a dictator in Chile at the time. Now, that's not a good thing, and you have a dictator running this. But there were some net positives that came from this constitution that was created 40 years ago. You had a lot of stability after that, where you had a lot of business owners saying that the Constitution kind of guaranteed a rule of law and a kind of a method for protecting property rights that didn't exist before this. And the businesses in Chile and the economy started doing really well. But now, what's the problem now? Now you see a lot of people that are on the lower end can see these people that are prosperous and doing really well, and they don't like the income disparity between the high and the low there. So that is one of the biggest things that's going on with the protests there. But if you look at overall, Chile is actually the most kind of the wealthiest South American country. If you look at a GDP per capita chart, let's see if I have a GDP per capita chart, you can look at all of South America. Chile actually has the highest GDP per capita. Each of their citizens, on average, is earning more than their neighboring countries. And the economy has been doing pretty well in the last few years. But still, it's not enough. So you had all these protests going on, not 2019, 2020. Now they're finally going to do the change to the Constitution. So what's going to happen is in April of 2021, you're going to have 155 representatives that are elected just to be the ones that would kind of structure this new constitution. And thinking about where this is going from here, right? What were some of the main reasons why they wanted this new constitution? Well, one was that they said they did want to keep the Central Bank of Chile autonomous, separate from the government, because they felt that that kind of avoided higher inflation that you had in neighboring countries like Argentina had massive inflation. So they think that that was a positive. But on the negative side, they would like to have something that promotes free education, free healthcare, free housing. So you have a lot of these programs that people are pushing for that is taking them in a very non-capitalistic way, like they're for their economy. And if you have access to those, why not access to, why don't they pay for your clothing and your food, and why don't they even assign you a job so that you don't have to, the trouble of a career search? Once you start going down the slippery slope here, you see what has happened to other countries. Other countries, specifically in South America, had rewritten their constitutions. And what ended up happening was they ended up having these really bloated documents that were potentially, one was 60,000 words. And to give you a reference for that, America's constitution is 4,543 words. And then this one over here, they get up to 60,000 words. And there's a lot of stuff in there. Like if you look at Brazil's constitution from 1988, 90% of the money that they have has to go, that the federal government makes, has to go to paying expenses such as pensions. So when you have these strict rules like that, it can really create problems in the society. So on a long term here, to see where this is going to end up heading, I'm not a gambling man, but if I would make a prediction here, it's going to be very difficult for this 155 representative pool to make a constitution that doesn't kind of cater to political whims and is not just trying to give kind of free stuff to different areas of society and actually enhances the lives of every individual in the country. They're going to go from a place where their GDP per capita was the highest. And if you look at what happened with some other countries that kind of tried different approaches, it could be successful, it could be very unsuccessful. Look what happened to Venezuela. In 20 years, Venezuela completely collapsed pretty much. So we can hope for the best on this, but long term, I think that this might be unfortunately a net negative. We'll have to see how they actually write out this constitution and what's included in it. And if they're going to go to this kind of free everything for everybody, which we know from Venezuela doesn't work so well. That's where people are eating cats and dogs, don't have access to fresh water, don't have access to power. Their currency's running in hyperinflation rates. We're hoping that that doesn't happen for an economy that had been doing pretty well, but of course also had some kind of social issues that had to be resolved. All right, so that's enough on that one. Next up, we have the car companies coming out with their earnings. So we had Ford. So Ford actually had a good quarter here, right? They reported income of $2.4 billion and a pre-tax profit margin of 9.7%, the highest in 5 years. Coming out pretty well here. They earned 60 cents a share or 67 a share adjusted versus 34 cents a share a year ago. So they doubled their earnings per share here. Estimates were for only 20 cents a share in earnings. Significantly beat the estimates as well. This is the first quarter under new CEO Jim Farley. So they're also changing their focus. We saw this with Harley-Davidson. Well, Jim Farley is actually taking the focus now and looking at SUVs and pickup trucks and commercial vehicles and iconic passenger vehicles now. So they're going to phase out the older kind of sedan models that are not really what's hip now, what's popular, what's cool now. You also had you had Fiat Chrysler report their earnings, and they recorded profits of $2.7 billion for the third quarter. That was a record for Fiat Chrysler as well. Last quarter, they lost $1.2 billion. So there's a number of companies. I mean, and earlier we talked about in other videos when Tesla had their really good quarter. You have Ford and Chrysler doing really well. A lot of these car companies seem to actually be doing well, which is strange because where are people traveling with these cars in a pandemic? You can't really drive anywhere. You're not allowed to go anywhere. So I know there was a lot of sales going on with different car deals. Maybe they're clearing out some old inventory here or something that was not sold last quarter when they had these losses. But it's very interesting to see. Next up, we have credit card companies. So we had MasterCard and Visa, these megaliths of credit card companies here. MasterCard actually had their revenue decline 14% from a year ago to $3.84 billion. They missed the estimate of $3.95 billion though, so it wasn't as bad as people were thinking. Now, cross-border payments made outside of the country, this is kind of like remittances or when you're sending money overseas to family overseas and stuff like that, they were down 36% right now. So that was one of the significant numbers that came out of their earnings report there. They had $1.51 billion in profit and earnings of $1.51 a share. From a year earlier, they were making $2.1 billion or $2.07 a share. So you can see there that it's not doing as well as they were last year even. Next up, we have Visa. So Visa's revenue was also down 17% though, 17% to $5.1 billion, just above the $5 billion that analysts had been expecting. Their cross-border volume, same as MasterCard, was also down, this time 29%. Earnings were $2.14 billion or 9.97 cents this year, and adjusted to $1.12 a share, which is down 29% from a year earlier. Analysts expected only $1.09 a share. Well, they beat that a little bit here, but still. You know, some notes on the conference calls here was that a lot of people are still spending, even though there is this pandemic going on, they're still spending money. But they're spending it a little bit differently, and also, they're not taking on as much debt. So this is the major thing for Visa and MasterCard. They like to see people taking on debt. They offer people debt. That's the whole purpose of their company with credit cards. And because of the uncertainty from the pandemic, people aren't willing to leave that balance on their credit card and have debt outstanding when they don't know if they're going to suddenly lose their job or something else is going to happen, if they're going to get sick and they need the money for an emergency. For the same reason as that, people are also paying down debt. So people that were running debt regularly during the good times, they're actually now paying it down. And this is, of course, hurting Visa and MasterCard's earnings because they only make money when people, you know, on a small basis of the percentage of the overall population, they're leaving balances on and they have to pay that additional fees every month. That's where these companies make their money. They make it from that and from the transactions costs that they put on different companies when you scan the credit cards. We also have some news from Visa that they are planning to buy a company called Plaid Inc. for $5.3 billion. So this company provides technological infrastructure underpinning a bunch of different major financial apps like Robinhood and Coinbase and Venmo. And this is a big purchase for Visa. It's $5.3 billion. And they're actually paying double what the private valuation of the company was there. So they really want this company. But now the US Justice Department is actually looking to intervene into this for antitrust concerns. So, I mean, just the fact that they said that, well, we're going to have to take a look at this, that's pretty significant because this can draw on for years. Look at the Sprint and T-Mobile merger that went on for years and years. There was talk of, they were supposed to have a merger, but is it too anti-competitive? Are they going to raise prices? What's going to happen? And that went for trial for a while like that, where the Justice Department was investigating them. So you have to see there what's going to end up happening with the Visa situation. Next up, we have earnings from the Chinese Amazon, Alibaba. So Alibaba came out, and they actually, after coming out with these earnings, they reached an all-time high of $318.63 a share. So looking at that, their 2014 IPO price was at $68 a share. And then on the first day of trading, it went to about $93 a share. That's pretty good just for the start, right? Well, it's at $318.63. It's a little less now after the sell-off. But when it hit that all-time high, if you look at the return that they've had there, that's about a 242% return in 6 years. 6 years. That's pretty good, right? Well, if you look at the average per year return there, that's 40% a year return on Alibaba. So that's a great company. It's been doing really well there. Next up, we have some news from Activision Blizzard. So Activision Blizzard earned 78 cents a share, where it's actually 71 cents a share when you adjust it. Then you had estimates of 63 cents a share. So they beat their estimates there. The revenues were not $1.9 billion versus estimates of $1.7 billion. So they also beat a little bit there. An important thing that came out here was net bookings were up $1.8 billion, which is 40% increase year over year. So that was huge for them. That's a major factor that they look at. They also reached 390 million monthly active users during the third quarter. And with Activision, you had the company producing the Call of Duty series. So you had 2 different Call of Duty games that are out right now. That's helping to promote like this major usage of their monthly active user base right there. You also have King Digital. So they're the ones that make that Candy Crush game on your phone that most people have probably paid, but I wonder how many of you have actually paid money for that? Well, they now have 249 million monthly active users, and net bookings were up year over year. So again, you're having growth in that. The Candy Crush, it was interesting talking about how they actually make that kind of successful, because you would think, who would play a game where you match different fruits up on the screen together and you get points for it? Why is that so big, and why has it been going on for 10 years now? This was an acquisition that Activision had made a number of years ago. And so you look at it and they said that pretty much every month they're releasing new content. There's always something new for people to play in the game, and it's really driven their growth. So it's interesting from a management perspective of how they're kind of monetizing that and how they're making their money. Blizzard hit 30 million monthly active users. Now, full year earnings are estimated to be $7.7 billion and $2.61 a share. Analysts had been hoping, though, for $8.2 billion and $2.59 a share. So on the revenue side, or on the total amount, they were looking for a kind of a big increase with everybody during the pandemic going to video games and going to this companies like this, Activision Blizzard. So because of the outlook not being so great, you actually had the stock sell off like 5.6% right after the news came out. And then everything this week got pretty beat up. So we'll have to see next week what happens from here and after the election. Next up, we have the shipping company UPS. So UPS announced that revenue rose 16% in the third quarter and profit rose 11.8%. And that is because of all this increased package volume around the pandemic. The company spent $179 million on their infrastructure to speed up delivery time. So that's pretty huge right there. They're making a lot of capital investments within their company. Now, because of that, profit was actually hampered. They were spending as much money, they were making more money, but they were spending a lot more as well. They were hiring new workers, and they had lower margins because instead of delivering big UPS tractor trailer trucks to businesses and warehouses. They were delivering small packages to people's homes all over the place, where you have, one or two packages per house, and you have to drive around a lot more. The costs for that are greatly increased. So the stock ended up selling off about 9% on the news. But overall, if you look at it for the whole year, it's still up about 40% for the year. So that's pretty significant. So although the US profits were weak, you did see earnings overseas really come up. They were up 45%. So that was significant there. So even though the US, North America might be having some trouble, you do see this other areas of the world having some growth there for them. Next up, we have Samsung, a tech giant that is in the Korean marketplace. They had their profit up 49% from the prior year to 6.29 trillion won to 9.36 trillion won now, or $8.24 billion in US dollars versus Korean won. So that was pretty significant there. They had their best profit in the past 18 months for this company, and they had strong demand for their smartphones and for memory chips. So you can see another tech company there coming out that has some pretty good earnings growth. Next up, we have Google, or AKA Alphabet, if you want to go by how the company likes to call itself now. So Google had 14% earnings growth. They earned $16.40 per share compared to the estimate of only $11.29. So revenue also beat. And if you're used to seeing those YouTube different advertisements throughout, you watch a 5-minute ad on YouTube and you get 5 different ads during the course of that video. Well, that helped YouTube to lead to a $5 billion mark for ad revenue. This is the first time ever that it has reached that $5 billion ad mark just for YouTube as the business division of Google. Shares were up 7% after this news of Google's earnings here. Another tech company doing well. They're also one of the ones that is being pulled in front of, I think it was Facebook, Google, and Twitter, which had their CEOs once again pulled in front of Congress for questioning on anti-competitive behavior, on monopoly, on censoring different parts of their content. But anyway, next up we have the company that continues to take over the world, Amazon. So Amazon came out with sales growth of 37% sales growth. Another great period here for them. Earnings per share were $12.37 versus the estimate of only $7.41. I mean, this company continues to just blow it out of the park here. The revenue for Q3 was $96.2 billion versus $92.7 billion expected. Again, another beat there. Now, the cost did increase in the quarter. They were hiring a lot of additional staff due to the pandemic, and there was also the surge in online demand right now. So if you look and you're trying to order stuff from Amazon, there might be some delays on that. But you're seeing a lot of these tech companies are spending a lot of money on their infrastructure, and you look at other companies that are struggling right now, they're not doing capital expenditures. They're not reinvesting in their business. What's going to happen on the other end of this crisis when you have companies that like these tech companies that are constantly reinvesting their profits into the company versus these other ones that for a year or 2 years or 3 years or however long this takes have not been reinvesting into their company doing capital expenditures. You're going to have these kind of economies of scale really start to multiply as it's compounded over time here. Next up, we have Apple earnings. One of the largest companies in the world. Apple was worth around $2 trillion in market cap recently. They beat analyst estimates, but importantly, the outlook wasn't as high. And that's a big thing here because the pandemic is creating a lot of uncertainty. If you look at the profit, it was down to $12.7 billion or 73 cents a share from $13.7 billion or 76 cents a share a year earlier. They slightly beat the estimates of only 71 cents a share. So 71 cents a share and then they made 73. I mean, I barely can call that a gain there. But if you look at the sales breakdown for what hardware was doing and what was selling and what wasn't, iPhone sales, $26.44 billion in iPhone sales. Now, service sales, this is very important because services is something that the CEO, Tim Cook, wanted to kind of make into the new main focus of the company rather than just being focused on hardware, kind of going into services and having subscription items like the Apple Music and the fitness and these different applications that people are subscribing to, and it brings in regular income streams. You see other companies like Microsoft and Adobe doing this as well with the subscriptions. Well, the total service sales were 14.55 billion. So that's actually the second largest business section that they have now. Next up, they have Mac sales at 9.03 billion. You had wearables like the watch, the Apple Watch and the AirBuds. Those items were $7.88 billion. And you had the iPad, which was $6.8 billion. So the iPad, which was the most of the time during the Apple presentation in September, is actually one of the lowest business sectors right now when you're looking at it. And a big factor with the problems with their earnings here and the iPhone sales not being that great. At one time, they were selling almost $50 billion worth of the phones, and this one was only 26.44 billion. They had their iPhone revenue fell 21% in the quarter because they delayed from that September time where they're supposed to release it into a month or so later. And that is what caused the kind of giant decline there in the sales. Revenue for the 12-month period ended up 5.5% from 2019 at $274.5 billion. That is a lot of money. Again, the company did not provide forward guidance for 2021 and for the next quarters because there's just too much uncertainty and, well, 2020, you know how it is.